Good morning. This is Tuesday, March 2nd. The time is 9:02. The Insurance Committee of the Tennessee House of Representatives of the 112th General Assembly is now in session. Clerks, please take the roll.
Representatives Carr, Sipicki, Freeman, Hawk, Hicks, Hodges, Johnson, Lafferty, Mitchell, Powers, Rudd, Smith, Terry, Thompson, White, Vice Chairman Rudder, Chairman Kumar.
Here.
Mr. Chairman, you have a quorum.
Thank you. Members, do we have any personal orders? No new jokes or anything? Our agenda today is a presentation by the Department of Insurance, led by Commissioner Carter Lawrence. We're grateful to have this presentation, and we hope that it'll enhance our and the members' baseline understanding of insurance. Some of us need it, others don't. The concept of insurance is complex, but we hope to understand the big picture and get a good view on the department and the industry itself. Insurance is basically, I'm told, risk mitigation, and it is something we need for events that occur rarely but are expensive. It is a wide industry covering the fields of health, property, casualty, finance, etc. And we hope to learn again about the industry and the department. We are pleased to have the top authorities in our state, Commissioner and Assistant Commissioner here, and we'll go out of session and welcome them for their presentation. Again, Mr. Commissioner, welcome, and kindly, for the record, do introduce yourself and to the committee members.
Thank you so much, Chair, and also Vice Chair and the entire committee for the invitation to be here. My name is Carter Lawrence. I am the Commissioner of the Tennessee Department of Commerce and Insurance, and again, very happy to be here with you today. Also with me to my immediate right is Toby Compton, who is Deputy Commissioner at the department. And then seated at the other table, first, Bill Huddleston, the Assistant Commissioner for Insurance, and then Patrick Merkel, who is the Director for Insurance. I do also want to note we have a few of our other staff in the room today. Alex Lewis, who is our Assistant Commissioner for Policy and Legislation, and our Senior Advisor, Jim Tracy, is also here with us today. Oh, and I also see David Combs, Director for us as well. So again, thank you so much for the opportunity to be here with you today. We have a brief presentation and an accompanying slide deck, which I will get started with for us. So first, before I dive in a little bit deeper to the insurance division, I did just want to mention about the Tennessee Department of Commerce and Insurance. As the name suggests, we have multiple functions, not just insurance, not just commerce. We actually have 7 distinct divisions from insurance, regulatory boards, securities, fire prevention, which is also the State Fire Marshal's Office, the Tennessee Law Enforcement Training Academy, and the Peace Officer Standards Training Commission, TennCare Oversight, and finally, administratively attached to us is the Tennessee Emergency Communications Board, which is commonly known as E911. So we have a broad range of regulatory functions that both directly and indirectly impact every single Tennessean on a daily basis. Also, one final note before moving into our mission, vision, and values. Of those 7 divisions, we have a total of 828 positions. 612 of those are full-time and the remaining part-time. This is a decrease from the crest in 2011 of 985 positions. In the years since, we've had a departure of 3 sections within the department: Fire Investigative Services, Consumer Affairs, and the Tennessee Corrections Institute. When I was the interim commissioner a little bit over a year and a half ago, had the opportunity to sit down with our executive leadership team and rethink our mission, vision, and values. And working in concert with all of the staff and with that leadership team, we refocused on our mission, which is protecting Tennesseans through balanced oversight of insurance, regulated professions, while enhancing consumer advocacy, education, and public safety. And we know that this mission is in keeping with the governor's mission, and also we believe that it aligns with the members of the General Assembly and what you want to see happen in the state of Tennessee. And the values that underpin our mission is customer service excellence, strategic decision-making, an inclusive environment, transparent and efficient government, and principled actions. And once again, we believe that we are able to live those values to daily positively impact all 6.8 million Tennesseans. You got it. Thanks. Okay. Want to focus a little bit on the economic impact of insurance in the state of Tennessee, because it is tough to understate how impactful it is for all Tennesseans in our daily lives. So first, a few numbers to hit. Since 2019, Tennessee's added 7 new insurance companies. So the assets held by the 64 traditional insurance companies that are domiciled in Tennessee are nearly $100 billion. You can see on the screen there, $99.5 billion. And over $45 billion of insurance premiums are written in Tennessee each year by the 1,907 companies that are licensed in Tennessee. So that puts us in terms of premium as the 16th largest in the country and the 33rd largest in the world, which, just to contextualize, means that Tennessee's insurance market is larger than the country of Mexico. So we have a really robust insurance market. Now, because of that, that means that over $1 billion is annually added directly to the general fund from contributions from insurance premium. And then just a final number to hit on is that according to our most recent survey, there are more than 50,000 Tennesseans that are employed in the insurance industry in Tennessee. Into the insurance division and talk about the 6 sections that make up the insurance division. And I also want to note that while I'm running through this, please stop me at any time if you have a question. And we have some extreme subject matter experts here with me to my left with Bill and Patrick. We'd be happy to take any questions that you have. And of course, we have time for questions at the end. So first, starting with agent licensing, this section licenses the insurance producers. And as of January of this year, we have nearly 226,000 insurance agents that are licensed in the state of Tennessee. Second, the financial affairs section oversees the financial condition of insurance companies and related organizations. And again, like I mentioned earlier, as of January of this year, we have 1,907 licensed insurance companies in Tennessee. Next, the policy analysis section reviews policy rates, rules, and forms that are filed by the insurance companies. And policies that are sold in Tennessee must have this approval before they're offered for sale. Fourth, the company examination section ensures that insurance companies domiciled in Tennessee comply with relevant state insurance laws and regulations. And they do that by examining company records and also conducting interviews. And we're really proud that during the pandemic, this important work was able to continue through a hybrid approach of remote and in-person. And we were able to continue to meet this important statutory obligation. Fifth, the consumer insurance services section makes sure that insurance companies in Tennessee follow the relevant insurance laws and abide by provisions in specific policy language. So they also provide important mediation, doing more than 4,000 complaints and receiving more than 75,000 phone calls per year. And thanks to their important finally, the captives insurance section is the newest of our sections, and captive insurance is essentially another risk mitigation tool that allows someone to own their own risk. And as of January of this year, we have now over 720 risk-bearing entities in Tennessee. 212 of those are pure captives, and the remaining are sales. And we'll talk a little bit more about captives later on. Thanks. So I'd now like to give a brief review of the scope, authority, and rate filing requirements for health, P&C, and life, just to hit on those big areas for us. So first, starting with health, it regulates health insurance products for individuals, small groups, and large groups sold by licensed insurance companies. And this includes the federally facilitated marketplace plans, Medicare supplement plans, long-term care insurance, dental, and vision as well. Our authority is derived through various statutes and regulations, and with that, the department ensures that policies contain specific provisions such as state mandates, mandated offerings, and required provision and review of rates. Finally, the department contracts with an actuarial firm to review initial and rate change requests for accident and health policies. The actuarial firm reviews the rate filings for compliance with statutes, regulations, and to make sure the rates are actuarially justified. And they then make a recommendation to the department as to those rates. All right, turning next to P&C. Once again, our authority does come through statute and regulations, and the department ensures that the personal lines and commercial lines of insurance policies contain the required provisions and offerings specified in statute and regulation. And once again, we contract out for an actuarial firm that ultimately makes a recommendation to us. And finally, life. Again, no surprise, our authority comes from statute and regulation, and actually have a little bit of a typo. We do not use an actuarial firm. I think we use a little bit too much control paste, and it bled over into this one as well. But it's only forms over which we have authority here, not for the rates themselves. So we do not use an actuary here. All right, turning next to our captives section that I highlighted briefly earlier. So captives have been a rapidly growing part of the risk mitigation tool. In fact, according to our most recent information, over 90% of Fortune 100 companies either have or are exploring captive insurance solutions. Like I mentioned earlier, it is a tool for mitigating both traditional, such as P&C and liability, and also non-traditional risk. So pandemic is going to be one thing that we expect to be especially important in the captive space moving forward. So captives may allow for better control and consistency when procuring tailored insurance products to meet the needs of businesses that traditional markets may not offer or may have hardened and become more expensive in recent years. Want to highlight the achievement that we've had in Tennessee. So Tennessee has been recognized as a top domicile, and the numbers bear it out. We are 7th in the United States, and we're proud to say that we're also 13th nationally because unlike most other sections of state government, we are directly competing not just against other states, but against the Bahamas, against Bermuda, and many other foreign domiciles where captives can pick up and leave from one to another. So we're really proud of the staff and the work that's been done to make Tennessee the gold standard for captives in the South. And we continue to grow, and our aim is only to get better and better at providing the domicile services. So I mentioned earlier, we have 720 licensed risk-bearing entities, and that's 212 for pure captives and 508 cells. So you can see the numbers broken down in front of you. That's a 64% increase since just 2019 on pure captives and a 32% increase since 2019 for cells. So that raises a little bit over $3 million in premium taxes and fees per year. That $3 million goes to fund not just the division, but also the excess to the general fund itself. And according to a survey of captive insurance managers, we believe that over 100 full-time, high-paying professional employment jobs have been created thanks to captive insurance. All right, I have one final slide to hit on about NAIC accreditation. NAIC stands for the National Association of Insurance Commissioners. It is the grouping of all of the insurance commissioners across the country and the territories as well, which come together to work on uniformity of rules in order to preserve our state-based system, because we have seen growing federal reach into all sorts of regulatory areas, including the constant threat that could come into the insurance space as well. So it's really important that we work with fellow commissioners and with our other jurisdictions across the country in order to create uniformity that creates reliability for our domiciles, but also for our external companies. Insurance regulators establish standards and best practices. We conduct peer review and coordinate regulatory oversight. And like I mentioned earlier, in so doing, we reduce redundancy and repetitiveness, which is not only a saver in terms of paperwork and time, but ultimately for money as well for the companies, which is able to be passed on to the consumers. So I'm proud to say that Tennessee has just undergone our re-accreditation review. While it has not yet been finalized by the NAIC, the team that came in and reviewed us gave us high marks. In fact, we got above average A's in every category. So we're proud that they're going to be recommending us for a full 5-year review. And I'm also especially proud that this happened while, according to the NAIC's own numbers in various metrics, Tennessee runs the leanest insurance department in the entire country. So we're very proud of the hard work that we do with relatively scarce resources. So thanks to the NAIC and to the reaccreditation department. Because of that, it means that we have adequate solvency laws and regulations to protect consumers and the guarantee fund that acts as a backstop. We have effective and efficient financial analysis and examination processes, appropriate organizational and personnel practices, and last, effective and efficient processes regarding the review of organization, licensing, and change of control of domestic insurers. So again, Chairman and entire committee, thank you so much for the opportunity to be here. I know I kind of ran through that. So if you have any questions for me or for the team, we'll be happy to run through those. Thanks.
Thank you, Mr. Commissioner, for an overall view. As representatives of the people, the most common question we get of insurance is that I haven't had an accident, I haven't had a claim, and my premiums went up 20%. It's understandable from the public point of view, and we do also understand that there are other forces involved, such as the risk with the group and the problems that they have faced or the management in the company. But they also believe that somehow the state or us, or especially you, can control those interest rates. So what do we tell them, and will you explain to us the process by which increases in insurance rates premiums are allowed?
Yeah, certainly. Thank you, Chairman, for the question. And I will hand over to Assistant Commissioner Bill Huddleston to talk through and to reference the specific statute that is the limitation for us. But broadly, like we talked about earlier, we have the authority that's provided to us by statute, and the actuarial firm makes a recommendation to us as to the soundness of it, and we have to accept that recommendation. And Bill, can you maybe go into a little bit more of the specifics there?
Thank you, Mr. Chair.
For the record, do again state your name and position.
Bill Huddleston, Assistant Commissioner for Insurance. Thank you, Mr. Chairman and committee, for your time this morning. That is a good question. I mean, it's happened to me before too. I'm sitting there with a increased insurance bill that I'm going, why? But I do think it's important to understand, as Commissioner said, the statutory authority is that we review those review the rates based on actuarial opinion, what is submitted to us, and we have our own contractor that reviews that as well. The purpose of that is for solvency in the greater market across the state to protect consumers so that companies can pay. That's my best answer for the consumer, to explain that it is to protect them, that they would be able to have their claims paid.
So the actuaries are outside experts or third-party contractors?
That's right. We have, and in fact, every time there's a new rate filed or a renewal rate, those have to be filed as well. All of those rates, we're a prior approval state, which means that we have to approve that rate before the insurance companies can use that. So it does rest on the department to make sure that they're sound. We have pretty large contracts with actuaries that are outside actuaries. Between P&C and health, it's about $3.5 million over the next 5 years in our contracts. They're pretty expensive contracts because that expertise is really, it's really, really expensive expertise, and it's really hard to come by.
So a company who is already profitable, they can still raise their rates?
If a company is profitable, they can raise their rate still, and we do want them to continue to be profitable and for the sake of solvency. So it's just that's one of our main goals, is to make sure that they stay liquid or have a liquidity measure that they can pay those.
I guess that depends also on the measure of profitability within the industry and the economic environment. Well, thank you. I don't know if I think I'll try to answer the question that constituents put to us in a better way. We do have our resident insurance expert, Chairman Powers. You recognize?
Thank you, Mr. Chairman. And yes, I completely agree. And the thing about one thing that somebody made a statement, and he's here today, but I won't point him out, but he said, we have the only product that you sell that you don't know how much it's going to cost. And that's true, because we don't, if you insure a house for $1 million and take in $500 worth of premium and it burns down tomorrow, you pay out $1 million and you've taken in 500. So when you're looking at rate changes, you're looking at a broader industry and the loss of the losses total based on all of the people that are insured for that particular company or that industry. So it is a spread risk, as we call it. But I've been doing it for 32 years, and I want to thank you all, because you all have been very helpful to me. Anytime I've called, anytime I've had a problem, I really appreciate it. So the question I did have, and one thing I run into, it seems like more lately as we have more people that are moving or selling out or merging together, is the non-compete clause. And so we keep running into people that will sell their company or merge with another company. Anyway, they have a non-compete clause. And I just want to know, it seems like it's something that's really kind of unenforceable in a way. And I'm not really sure how we can ever enforce those, or if we can at all. And I just kind of wanted to get your perspective on those and what to do when we get those calls all the time that people are breaking a non-compete clause.
So thank you for the question. We try and stay, while we are focused on staying within our statutory authority, we always welcome phone calls asking from consumers about what they can do. And we always encourage consumers, if there's any sort of question, to file a complaint with us. And we have a great complaint process and the mediation process that I talked about earlier that we can circle back to. And unless Patrick, who until very recently was an attorney with us, unless he is going to correct me for being wrong, which does happen from time to time, I don't believe that a non-compete would be within our statutory authority for anything that we could do. That said, I understand issues of employment, especially given what we talked about with how many Tennesseans are employed by the insurance industry, that a profusion of non-competes would be harmful for a lot of Tennesseans in the industry. So if it's okay, I'll pause there and just make sure, Patrick, if I stated that right, that would not be within our authority.
Patrick Merkel, Director of Insurance. And Commissioner, you are correct. It falls down to the contract requirements between the parties, and they would have to then seek a remedy in a court of law.
Well, Chairman Smith, you're recognized.
Thank you, Mr. Chairman. And I do have a couple of questions, but I'll acknowledge the chair. Welcome. It's good to see you, Commissioner, and congratulations. You're doing a terrific job in a very consequential time. You just mentioned complaints and mediation. Kind of walk us through, particularly on the health side, what you see as far as the types of complaints that may be coming in from consumers. And I know we anticipate many of those are going to be about rates, but I know that from hearing from providers, many times I hear complaints verbally about maybe loopholes, interpretation of law. Kind of walk us through maybe a couple of complaints that you hear, and have there been fines that have been levied? You know, what kind of actionable things does the department do to make sure that while we want to make sure things are solvent, profitability and solvency is not the end all. And so if you would, I've got another follow-up. Thank you.
Absolutely. Yeah. Thank you so much. So I'll let Bill Huddleston, our Assistant Commissioner Bill Huddleston, talk through the specific. I do want to take the opportunity to say, we always, like I mentioned earlier, we always want people to file complaints with us to give us an option, the opportunity to look into it. So that, of course, is consumers, but that's also providers. And when I spoke to the TMA relatively recently, I stressed that to them, that providers are not excluded from the complaint process. And we welcome, in fact, we encourage complaints to be filed with us so that we have things to look into, because there are some things that we hear about from time to time about when there are recriminations. And when we only hear rumors about it, it doesn't allow us to do anything. We need to actually have the complaint so we have the opportunity to ask questions and to look into it. So thank you. And I'll turn it over to Bill to the call of your question to kind of walk through that process, and then the latter part about what some of those look like.
Thanks for the question. Last year, well, the last data that I looked at from last year, I think that as far as health goes, about 30% of our complaints total were related to health insurance. The types of complaints were probably the top two would be delay in payment or denials, broadly speaking. So that's the landscape we're looking at. I think as far as the question about providers, I haven't seen anything really specific. I am aware that there are rumors. I too have spoken with TMA. Actually was on the phone with them yesterday, and we've been, I've participated in some working groups with them that I think have been really productive about other issues. They had providers in the room. They had, or on the virtual call, they're providers and payers. And they were really productive calls. So I think I do want to take this opportunity to slide in there that we're working on those relationships. I talked with Russ Miller, their CEO, yesterday on the phone at TMA about a town hall I'm going to kind of work out with them later this month. So those are important relationships, I think, for this solution for the issue you're asking about going forward. And we're definitely open at the department to working with them on that. So that being said, it would be helpful to have some formal complaint or something to substantiate the rumors that I hear. So
You're recognized.
Thank you, Mr. Chairman, and thank you both. And I appreciate you being honest and forthcoming. There are recriminations. That's one of probably the most common thing that I hear from providers is having a fear that if they bring forward a complaint, that they will soon be maybe encouraged to find another network. So I appreciate, but a follow-up question on premiums that Dr. Kumar brought up, our chairman. All throughout the year of 2020, we kept hearing about the delay in the world of healthcare, of elective procedures. And then there were soon headlines to follow that there was some COVID, there was a lot of cash in the industry because of delayed care. And yet my next door neighbor, whose property adjoins mine, is a small business owner. He employs fewer than 20 people. He had not one single significant health event in his employment, and yet his rates went up almost 27%. And so I do understand, and I'll be happy to take a response, but just understand that rate increases are understandable. But last year was a little unique, knowing that there were about 7 months of delayed care that was put off to this year. And so if you want to speak to that, I'd be glad to hear it. But just understand that, solvency, again, very appreciated. But many of these companies that do offer care, they have investors. And while we all are elected to speak on behalf of the interest of Tennesseans. So love to hear your thoughts, Mr. Commissioner.
Yeah, thank you so much for the question. And to return to something you mentioned earlier about a difference between profitability and solvency, absolutely understand. And our role as the regulator is not to ensure profitability. Our role is to ensure solvency, to make sure that claims are paid when Tennesseans have had a claim experience, to make sure that happens. So we are aware of 2020 and of the plan year and what that meant for a delay at times and in places and electives, and what that has meant for the overall claims experiences for insurance companies. We also know that to use the cliche, these have been unprecedented times, and there's been difficulty in forecasting into the future as to what claims experiences are going to look like moving forward. Again, we are following the recommendation of the actuaries as we get to the actual approvals of those rate filings. So I would return back to that and certainly hand over to see if Bill might have anything to add to that statement.
Thanks, Commissioner. The thing I would add to that is in our rate filings, we do see some detail, and what the actuary turns a memo into us with each rate submission. And I know this is maybe getting in the weeds a little bit, but part of that memo is them outlining present dollar benefits versus present dollar premium. So that's how they try to measure that to make it justifiable, to make it reasonable. So that's what we see. And I don't know, the specifics to the person that you were speaking about, but I do know that in a lot of cases too, the carrier is kind of pinned into that 80% medical loss ratio. So some premiums have to be returned to some policyholders at the end of the year. So that's one thing that kind of limits that or can make that 80% medical loss ratio attainable. I say all that. That's just that's what we see at the department. But I am also absolutely empathetic to what what your constituent was telling you about.
You're recognized.
Thank you for your indulgence, Chairman. And one final thing, just for your testimony to be on the record, we are aware, most of us, that we'll see a very significant pharmacy benefit managers reform bill come through this legislative session. And for the record, would you offer testimony, Commissioner, as to how pharmacy benefit managers are treated in the state of Tennessee? Are they viewed as an insurance entity? Are they viewed as an intermediary of an insurance entity? And to whom do they owe a fiduciary response? Again, thank you, Mr. Chairman, for your indulgence.
May I interrupt in the sense that I was told before that the department is hesitant to answer questions about pending legislation. With that caveat, if the department feels comfortable answering in a general way, they're most welcome to.
Yeah, thank you, Chairman. And I believe, as the members of this committee know, we never want to get in front of the governor. So I do want to caveat with that. As to the specifics, when you ask about the fiduciary and some of the other requirements, I think I would be best, you would be best informed if I turn that over to let either Bill or Patrick speak to some of the specifics about how PBMs are viewed under the law into the fiduciary relationship. So I'll turn that over to the capable hands of our expert and then attorney as well.
Very generally, I can just say at the department, it's a registration process. They register with us. I guess some of the PBMs are owned by insurers. So as we regulate the insurer or the carrier, they would fall under that. Fall into that holding system. But that's that's very general, I know. Fiduciary.
Based on contract.
Yeah.
I'm sorry, Patrick Merkel. It would be based on the contract language between the carrier and the PBM, and that would define their relationship. It wouldn't, as far as I know, it's not defined in statute of how that relationship is set.
Thank you, Chairman Smith, for especially reinforcing the most common questions we are asked in the districts. That is, what happened to my premiums and why? If a constituent or a citizen was to file a complaint, I assume their options available are online or by hotline. In how much time can they expect a response from your department?
Great question. I'll let Bill talk through that. And actually, Bill, if you would walk through the complaint process itself, so that they have a little bit more information to talk about with their constituents. But I do want to be clear, we absolutely have online option, and we love that for the efficiency that it provides, but we also know that not all of our all Tennesseans either want to or can use internet services. So we certainly do have a phone option that's available, and we're constantly putting on social media and on printed materials what that phone number is so they can reach us. Bill, could you talk through the complaint process itself?
So yes, great question. We have a director of consumer insurances that has made a career out of that specialty. She does a great job. Vicki Trice is her name. She has a great staff, and they are very responsive. We get daily complaints that come in, and she responds. They typically respond within the 24 to 48 hour time period. Okay. So they respond, they start the dialogue with the complainant, and, from there, we have mediation authority we can mediate with the carrier or agent. And there's a host of remedies for whatever the issue may be, depending on what comes up. I mean, it can be that, sometimes we're lucky enough to get clearer information, sometimes from the carrier. Sometimes we get a settlement from them. We get money. We recover money a lot of times for the complainant. But a lot more times than not, it's not even a complaint that ends up getting opened up. A lot of times, the complainant, through speaking with the people on staff, kind of become a little more educated and find out that they might not have a valid cause against. So there is a lot of education in that process, and a lot of communication that we're just kind of in the middle of.
Thank you, Mr. Huddleston. Chairman Hawk, you recognize.
Thank you, Mr. Chairman and Commissioner and your team. Thank you very much. We talk in this committee that insurance does not have a lot of comedy into it, but you've proven there is by bringing Jim Tracy on staff. So thank you very much for that smile that you've given us. We appreciate that. I do want to thank you, staff. Graham Tudor's done a great job helping me on some issues most recently. I really appreciate that. If I could, Mr. Chairman, a couple of questions. I want to go down the rabbit hole with the actuarial firm that we retain. What is the push and pull when that actuarial firm comes back with their recommendations? I think I heard you say, Commissioner, that we have to accept their recommendations, or is there a push and pull as we're talking about rates going back and forth there? Thank you.
Yeah, and thank you for giving me the opportunity to clarify, because I did misspeak when I said that we just have to accept their recommendations carte blanche. And also, I want to pause real quick and say thank you for the staff comments, both for Graham, then also especially for Jim as well. We are thrilled to have him on staff, and he's a great addition to the team. To the actuarial firm and to the contract, Bill spoke about some of the numbers themselves. And I do just want to pause real quick to mention the reason why we've contracted this third party rather than doing it in-house is due to the difficulty in being able to hire actuaries to the state. I talked earlier about the NAIC and the accreditation. One of the things they look at is personnel, and they look at your ability to hire, to retain staff. Actuaries across the country are very difficult for insurance departments to be able to hire. They take a lot of specialization, and it takes a lot of pay to get them. So a lot of departments have done what we have done, which is contracting out to get those services. We've been fortunate to be able to work with a specific actuarial firm for a number of years, and we have a good relationship there. I'll turn it back over to Bill again to talk through both for that firm and then actually to the question about how we work within code for accepting the recommendations and the pushbacks, which we absolutely do have, where we say, we think that you overvalued this particular data set, and we think it should be adjusted differently. But if it's okay, Bill, I'll let you take those.
Sure thing. Thanks, Commissioner. I think when all said and done, I think statutorily we don't have authority to deny something that is actuarially justified. as we've spoken about. So that's where we start. I do know that we do have communications with them, and that we there are instances where we have said, no, that's too much. That seems high. Our actuary has a different opinion than the actuary who's from the carrier who's submitting the rate filing. So we do have those discussions. There have been, I don't know specifically, there have been issues, for instance, with long-term care. Long-term care across the country, state to state, varies. There's a huge difference in what some states will approve for rates. And we're kind of right in the middle. But what we've seen is when proper rates weren't approved, or actuarially justifiable rates weren't approved, that's created solvency issues. Again, back to solvency, I know, but it's created an industry issue that we're maybe soon not even going to have a long-term care product. So that's ultimately what happens. We do push back a little bit in terms of when they ask for rate increases. Over certain amounts, we ask that those rate increases be split over not just 1 or 2 years, but 2 or 3 years, so that it's not all at once. So we try to work on that to make it a little bit more palatable for consumers. And we do, we have not, like I said, some states you'll see have a 400 or 500% rate increase, and we never ever have approved anything that high. We've never even been in triple digits. So I think, those are some important things just from our day-to-day and how we handle that.
Thank you. And if I could follow up that with another question, who is our actuarial firm that we contract with?
Scott Mayberry is our actuary, our contractor.
Okay. Is he an individual? Does he work for an entity, or?
I think he's an individual.
Okay, thank you. If I could follow up and I'm fortunate, I'm looking forward to sponsoring the Insurance Modernization Act that we've got going through the legislative process. And we touched on the captive insurance market that is burgeoning in Tennessee. Tell me a little bit about the industry itself, and as we're looking at all the Fortune 500 companies that have already begun their captive insurance programs. Does that industry have to have a headquarters in Tennessee, or is this a tool that we can use to recruit corporate headquarters to come to Tennessee through the successes of our captive insurance program?
Yeah, thank you. And we certainly hope that we can use anything to recruit business to Tennessee. A captive insurance company does not require physical presence in the state. So it does, we do have requirements, as do the other jurisdictions, about a meeting to occur in the state of Tennessee. And so there is some benefit from a tourism perspective. And we have seen that a lot of our captive insurance companies domiciled in the state of Tennessee also using local captive managers. And that's what has led to some of the job creation that I talked about earlier with the 100 jobs, high-paying jobs that have been created. I do also want to point out that it's not just the Fortune 500s, Fortune 1000s that can benefit from a captive insurance, but truly, owning your own risk can be an appropriate tool for all sorts of firms, from the largest to a smaller but a more complex type of risk that they have to understand and write for, that maybe traditional might not understand or be able to write as well. So again, it is a really important tool for risk management and mitigation. And we think that a healthy captive insurance marketplace in Tennessee is another feather to stick in the cap of Tennessee from an ECD perspective. And I've met with Commissioner Rolfe to talk about this so that he knows when he's going and pitching to companies, and he's able to talk about all of the things that Tennessee is able to offer, to also be able to talk about Tennessee domicile.
Thank you, Chairman Hawk. Representative Lafferty, you're recognized, sir.
Thank you, Mr. Chairman. After all that talk about actuarials and everything, this question is going to seem kind of elementary probably. I was curious though, with the retail environment, shopping loss through theft and other things, I was curious, is there a percentage that you could offer us that we pay for, say, fraudulent insurance claims and or events? There's no shortage of TV commercials and billboards out there saying, hey, call us if you've been hurt. What kind of cost does that add to the everyday consumer with the theft and the quick settlements and things like that?
That is a phenomenal question. And unless my team absolutely blows out of the water, I'm going to guess we're going to have to follow up with you on that. But does anyone know that off the top of their head?
No blowing it out of the water today.
Yeah.
I'm going to have to get back with you on
Try
that
getting that.
information.
Thank you, Mr. Chairman.
I will say, Chairman Hawk, I'm sorry, I did misspeak earlier. Scott Mayberry is the individual actuary. The firm is Lewis and Ellis.
I guess Representative Lafferty stumped you. Representative Freeman, you recognize.
Thank you, Chairman. Thank you for being here today, and thank you to Representative Hawk for bringing the modernization bill, allowing the state to start doing potentially a captive. And that's actually where my question is. You spoke about how a captive is a great opportunity for big and small businesses. And my understanding is that there are significant capital requirements to open a captive, which I would believe would probably preclude a smaller business that may not be able to self-finance or self-fund their own insurance program. And my concern is if you look at the 64% increase year over year, 90% of Fortune 1000 companies beginning to do it. I regularly ask insurance, why is it one of those that doesn't seem to follow traditional economic process, and that it's not really a market approach, it's really more of a risk-based approach. And if it is a risk-based approach and we're going to allow a meaningful percentage of businesses, potentially anybody can pull out and begin their own captive, would that not increase the risk of the risk pool that remains behind, that can't self insure, and at some point will that not affect those that maybe couldn't open a captive?
Yeah, thank you. And I'm going to try my best to hit all of the components of your questions. Yeah, thank you. So I as far as what I mentioned about it being a great opportunity, I do want to stress that it may be another tool in the risk management, risk mitigation toolbox for companies. It's not necessarily appropriate for all, but for those who have specific risk that's hard to write, like I mentioned, it can be. As far as Tennessee and our approach to captives, we do want to make sure that we're not just going to say yes to any captive. We want to make sure that they are financially sound. And as to the specifics of the capital requirements, I'd let Bill talk about those. We do have a little bit of difference in the way that you're approaching for a captive versus a traditional, where the risk of insolvency in a traditional is going to impact, not just the one person whose claim isn't paid, but for all of the other people in the pool. Whereas for the captive, it is the own company that owns its risk. So the risk from an insolvency in a captive is very different. And the capital requirements, a company might not put all of its risk management into a captive, but one particular piece of it. So a livery company might put one component of its livery operations into the captive while maintaining traditional insurance for the other pieces. So if it's okay, if I've hopefully gotten a good bite of that, I'll turn over to Bill. If you maybe want to talk about some of the capital requirements that we have. Thank you.
Sure thing. So we do have minimum capital requirements for a captive to start up. There are several different types of captives, so that minimum amount can be different. Right now, it's I think for a protected for a small pure captive, it's 250,000 minimum capital requirements. Additionally to those minimum capital requirements, we look at each captive. They're all different, like I said. their reserves every year, they do have to have, back to the actuaries, I know, but they have to file, even though it's owned risk, they still have to have actuarial opinion on if they have proper reserves. So that's another important thing to remember. And then the one other thing I think Commissioner did, talked about, the market that's left, but I would say too that sometimes a captive is making that move in response to a market where it's already difficult for them to find a product. And there are examples of that, but just very generally, I would throw that out there.
You're recognized.
Thank you. Thank you for the answer. Yeah, I guess the one that I'm seeing a lot is the dramatic increase in property and casualty, and people are deciding that it's actually cheaper for them to begin a captive than to pay the pretty extreme increases in property and casualty. So anyway, I appreciate your answer.
Thank you. Representative Mitchell, you're recognized.
Thank you, Mr. Chairman. Yeah, and back along the same lines of the captives, if you guys could clear up, I don't want folks to get the impression that it's only the huge Fortune 500 companies or the, 1,500 employees. The guy that has a small business with 75 employees can be a sale in a captive. And, so it can reach a lot of people, as well as the risk of the captive with the levels of reinsurance that are on most captives, on the bottom level of a captive and on the large claims of a captive. I think the risk is, it's just a different type of insurance company. So if you guys could clarify that. But secondarily, Tennessee is becoming a leader in this industry. And if we don't keep up, we fall behind. And, right now, there's a couple of northeastern states that are probably a little ahead of us. But we've got states like Alabama right now who are trying to get in the ball game in our area and surpass us if we don't keep up to speed. So I just want the department to understand that, and let's not fall behind in another area in this state. Let's become a leader in an area where we are moving forward, and let's keep up and stay ahead of the competition, because this does bring a lot of resources and capital to this state. So with that being said, if you can clarify the sales and, just who can participate in the captive. Like he said, it's P&C. I think mostly it started in this state, workers' comp. And now with the health industry, it's going gangbusters in health insurance in this state. So thank you.
Yes, thank you so much for the opportunity to emphasize what you just mentioned, that it's not just the Fortune 500s and 1,000, like I said earlier. It can be an appropriate tool for all sorts of sized entities. And thanks also for highlighting the cells. We're really appreciative of the cell legislation that we have that gives us another tool to be able to provide, like you correctly identified, for the smaller to join a cell rather than creating a pure captive and having the capital requirements that Assistant Commissioner Huddleston was talking about earlier. And the cell growth has been phenomenal. There was about a 2-week period where I felt that every single day I was signing off on a new cell application. So we're really proud of that. And kind of more broadly to what you were talking about maintaining the positive work that has happened in captives, we're really appreciative for all the new legislation that we've been able to get on maybe not a yearly, but every other year type basis, because like you noted, this is a quickly evolving industry. And as I mentioned earlier, we don't just compete against Alabama, against North Carolina, Vermont, but we compete internationally. And these, they can be very easily redomiciled.
You're recognized.
Yeah, thank you, Mr. Chairman. And like you said, you recognize the amount of time that each one of these is coming for your signature each day. And as this grows, if your department is not structured in a fashion in which that speed can happen, if unfortunately the guy after you, or maybe during your time, it starts lagging, let's make sure they don't go somewhere else. So, that's where the department's got to understand, hey, maybe our processes aren't keeping up with this industry. We may need to revamp and look at how we're doing things within the department. But as you said, let's hope your signing pen keeps busy.
And thank you. And we are proud of one of the silver linings over the last year was the move to remote work and to e-signatures, because a document that previously could have taken 3 weeks to move its way up from the originating desk all the way up to the commissioner's desk is now customarily moving forward in 2 days. Because there's no physical walking it around, getting stuck under a pile. There's a lot more accountability in making sure that documents are being seen, reviewed, and signed off on in a timely manner. So this is one particular area that has benefited immensely from the e-signature move, and we're proud of how we've been able to adapt to that, and they've certainly been beneficiaries in the industry. And thank you, and we're absolutely keeping focused on maintaining the good work that we've done and carrying it forward.
Well, thank you, Mr. Commissioner and team, really, for a very good session. Members, thank you for your questions and participation. I don't want to overwhelm former Senator Tracy, but he was visiting my district that borders on Kentucky, and we had made some water arrangements to get the water from Kentucky for the regional use. And we were lamenting, some of us were lamenting the use of Kentucky water. He told us that we will be better basketball players. I was in the audience. Thank you. Members, if no further questions, we'll go back into session as a formality. And if there is no other business to bring, we stand adjourned. Thank you.
Yo pensé que esta es la que iba a tardar más.